Hello everyone, welcome along to today's webinar where we will be looking at how to choose a golden visa investment. We've had some good feedback about our webinars recently, so we're going to stick to the same structure that served us quite well. That means you'll be stuck with just little old me today, and we'll do a deep dive into everything that you need to know about golden visa investments in Portugal. What's on the agenda for today? Today is going to be more of a specialized session focusing purely on the investment side. So I don't really want to cover any other ground today. If you'd like to know more about the Portuguese Golden Visa, the process, how it compares to the other Portuguese visas that are available, and ultimately the pathway to citizenship, then do check out my other webinar, Portugal Golden Visa, Everything You Need to Know. If you'd like to learn more about the current landscape, the outlook for 2023 and beyond, and what will happen when the Golden Visa eventually closes to new applicants, then check out last week's session, which was Portugal Golden Visa, Closure, Timelines, and the Law. Both of these sessions are now available on YouTube, or you can email me directly, jonathan.ralph@holbornassets.com, and I will send them over to you. Today, what we'll do, we'll get started by looking at the purpose of the investment first. So what are the main functions of a golden visa investment? What are the boxes that we need to tick? And just as importantly, what is a distraction and what is essential? We'll then look at the differences between the two main golden visa investment types, and those are funds and real estate. There's quite a lot of differences between the two, and they cater to two very different types of investor. So that is quite an important topic to cover. After that, we'll dive into the different types of risk that exist. Now, spoiler alert, you'll be used to me saying spoiler alert at this point. We'll be focusing on the real estate side here, as the topic of risk gets a little bit more complicated here. Funds are usually quite a bit higher risk than real estate, but this risk is quite straightforward and easy to understand. So we'll look at the types of risk that we need to be aware of. We'll look at the differences between the two main types of real estate investment that exist, that is to say, full title deeds and fractional ownership models. And then we'll look at some scenario planning and the key questions you should be asking yourself to make sure that your investment is a safe one. We'll then look at some example investments to illustrate these points. The investments that I'm going to show you today, we're actually going to focus on the title deed model, although we do have some fractional ownership options available. But what I show you today is going to be the leading options available in the market right now. So if you're looking for your own golden visa investment, be sure to stick around for that. And then, as always, we'll be closing today's session by looking at your questions. Okay, so diving in with a quick word on Hold One Assets. Those who have seen my webinars before will be very familiar with this slide at this point. We're one of the largest expat financial services firms. We specialize in investment solutions for internationally minded people. Our aim, as you can see on the right-hand side of your screen there, is to put the right money in the right place at the right time. And that means being with you for all of the major financial milestones in your life. We serve more than 20,000 clients worldwide across more than 100 different countries, manage $3 billion worth of client assets, which makes us quite a significantly larger entity than most of the golden visa agents operating in Portugal. We also have other areas of differences versus the other operators as well, simply because our core business is a regulated activity. So we have divisions that are regulated via the Financial Conduct Authority in the United Kingdom. We have another that's regulated here in the EU via a European head office, which is actually based in Cyprus. I spend most of my time in our EU regulated business. And then we also have other investment licenses for major jurisdictions around the world. I've talked in the past about our Dubai license and other licenses in other jurisdictions. We're multi-award winners, very proud of our 4.8 out of 5 rating on Trustpilot, supported by more than 2,000 reviews now, so that graphic is a little bit out of date. We are very much at the head of the offshore financial services market, and perhaps the salient point from this slide, for today's session at least, is that we are an expert team. We have handled, or rather our team has handled, more than 1,000 golden visas at a 100% success rate in Portugal. That is more than 10% of the golden visas issued in the country. So by working with us, you can be sure that you're in good hands. We're a tried, trusted, expert team, highly experienced, fantastic track record. Hopefully, I'll convince you of that even more by the time we get to the end of today's session. All right, so that's the basic background out of the way. So let's dive into the meat of today's session by looking first at the purpose of the golden visa investment. Now, many people that I speak to are getting this wrong. Actually, I might jump the gun a little bit there. Many people I speak to are getting this wrong a little bit. Why? Because they don't have clarity on what the investment is really for. And therefore, they can get completely confused and not really understand what it is they should be looking for. So, now, the first key point is that the Golden Visa is not for those moving to Portugal immediately. Now, if you're moving there in the next year or two, you may wish to consider the D7 visa instead, aka the passive income visa or retirement visa, or alternatively, the recently announced digital nomad visa. Now, these are cheaper routes and require no underlying investment, but you would be tied to Portugal and need to maintain tax residency there. That means living there for 6 months out of the year every year. But assuming you're not moving to Portugal immediately, the Golden Visa is a fantastic way to get European citizenship. And it should be seen as an investment. So you're not looking to invest in a home per se. The right investment has a good fundamental financial case and a solid exit strategy after you've been granted your passports. Now, this exit strategy should allow you to recover your capital, at which point you can move anywhere in the European Union with no restrictions and choose the right forever home for your family. My advice, sincerely, do not try to combine a Golden Visa investment with a forever home, because all you'll end up doing, and I see this a lot, is compromising and making a poor decision for the long-term future of your family. It's much better to find that forever home when you're actually looking to move and put down roots. This is also true if you're not 100% committed or convinced by settling down in Portugal yet, and 5 years to citizenship is actually a long time. And you may choose to use your citizenship to move to Spain, France, Italy, Ireland, Greece, anywhere else in the Schengen area that suits your intended lifestyle. So, to be completely clear, where can I get an EU passport quickly and with a good return on investment, ROI, is a great question to ask. It is not the same question as where do I want to live for the long term? You answer that first question by selecting the right investment. That second question, where do I actually want to live, can wait until you have your citizenship, until you have your passport in your pocket. Okay, that's a really important point. So now that we have that clear and we're looking at an investment case, we are not looking at a home. So that begs the question, should I invest in funds? Should I invest in real estate? Now, because we're not looking for a home, that's a very fair question. So let's break down the differences on this slide. Now, first, entry cost. Entry cost. Funds require a minimum investment of €500,000, whereas the entry point for property is considerably cheaper, almost half that at €280,000. So real estate is much more accessible in the main. It's also a tangible asset, something that you can touch, which gives you greater security versus a fund where your capital is usually much more at risk. That said, the fund route does usually offer the potential for higher returns. This is quite normal when an investment is higher risk. There's something in investment theory known as the efficient frontier. We're not going to go into that today, but usually higher risk does equal higher returns. The trade-off is that the returns available with real estate are steadier, far more predictable. By extension, the return on investment on a fund is neither fixed nor guaranteed, whereas real estate may give you an upfront yield, which of course locks in the return. Now, if that's the case, it may even reduce the amount of capital that you need to contribute in order to qualify for the Golden Visa. That can be a very interesting benefit. We'll go into that when we look at the investment cases in just a few minutes. Capital is also at greater risk with a fund-based investment, as I've just alluded to. Why? Because fund-based investments are more exposed to underlying economic trends. Given the recent instability in global stock markets, there is a greater potential for the fund investment to lose value by the time it comes to renew the visa or exit the investment. Not the case so much with property, which is a more resilient asset in times of economic difficulty, volatility, or instability when we look at historic trends. Now, we can sum up the fund versus real estate question really quite easily. This is a little bit of an oversimplification, but sometimes simple is useful. Funds tend to be high risk and therefore offer the possibility of a higher return, whereas real estate allows you to manage your risk position a lot more easily. Real estate offers more stable, more predictable returns usually on your investment. And it's for that reason that we can make a generalization that funds are more suitable for the more adventurous investor, whereas real estate is usually the go-to for someone with a more balanced attitude to risk that's looking to have a tangible asset that they can purchase, forget, and then just focus on getting the citizenship after the 5 years. Let's build on the concept of risk a little further here. Now, the risks of investing in a fund may be higher, as we've just mentioned, but they are quite easy to understand. So as I mentioned in the preamble, we're going to focus on the risks in the real estate sector here. Now, real estate is often more suitable than funds for most investors, in my experience. But if you'd like a deeper dive on the fund route, just get in touch and I'll be more than happy to give you a personalized presentation. Now, because we're not looking for a home, and the law in Portugal actually limits the use of residential properties for golden visa purposes, we're going to focus on hotel-based investments. These are now the go-to investment type for many golden visa investors. If you'd like to know why and have a deeper dive into that, check out my original webinar, Portuguese Golden Visa, Everything You Need to Know, on YouTube, as I mentioned in the introduction, where I'll break everything down there. Now, focusing on risk, the first type of risk is construction risk. Essentially, what is the risk that the building I'm investing in doesn't actually get finished? Excuse me. Now, we see this an alarming amount in Portugal, actually, where a project can run out of financing halfway through construction. That can lead to long delays, even a loss of investor capital in some cases. So we need to understand, one, is the building finished? If yes, great, no construction risk. If no, how much construction is remaining? What is the developer's size, solvency, track record in the country? Do I have an investment partner running due diligence checks on the developer to avoid any problems in the construction process? It's quite easy to become a little bit blinded by the promise of a high yield and then choose an investment that has high construction risk. We see this quite frequently with off-plan projects. One of the main reasons that we don't tend to offer so many off-plan projects to our clients. So I would urge you to be very mindful of construction risk when choosing your investment, regardless of the yield that's being promised. Secondly, mentioning yield or cash flow risk. Now, how and when am I getting paid on my investment? You'll want to invest in a proven project, a project that has a guaranteed yield. And a good way of minimizing or eliminating this risk is by selecting a property that pays the entirety of the yield up front. Now, here at Holborn, we insist on that as far as is possible. It is a far more comfortable investment experience when you've been paid 100% of the yield on day one, rather than having to collect it year after year from a property developer or hotel management company. Lastly, number three, arguably the most important area of risk when we discuss the Portuguese Golden Visa is buyback risk. Now, for most investors, the buyback is the exit strategy once they have their Portuguese passport. So it's crucially important that it's reliable. And a buyback is only as good as the counterparty that is buying the property back from you. So essentially, who am I entering into this agreement with? Who am I agreeing this with? Very, very important question for you to ask yourself. Now, if the developer is not going to be around in 5 to 6 years, the buyback, therefore, would not be able to happen. So you need to make sure that you're signing up with someone reputable, a developer with a strong track record. If your Golden Visa agent, such as ourselves here at Holborn Assets, if they're doing regular due diligence with the developer, then that would be even better. Okay, so building a little bit more on this, not all property investments are the same. Pretty sure that was self-evident, and even more so after we just looked at the previous slide. But two main differences. There are two ownership models that exist, very different in their nature. Now, the first is a title deed. This is where you physically own the property in question. Your name is on the deed. Again, self-evident. The other model is fractional ownership, and this is where you own a percentage share of a building rather than a specific apartment or a specific unit. What are the differences here? What does that actually mean? Well, if there is no buyback involved, then a title deed is far easier to sell on the open market. Excuse me, struggling a little bit with a sore throat and a cough. You are far more likely to find a buyer for an apartment than you are for a buyer of a share of a building. Now, this may seem quite obvious, but there are other differences between these two models which make these differences even clearer. Now, let's do some scenario planning before we actually get to the scenario planning part of this presentation. A black swan event occurs, worst case scenario, and the hotel operation is no longer viable. Let's say there's a war, some kind of crisis, not so difficult to imagine after recent years, but your investment would still hold good intrinsic value if you own a title deed. A minority holding in a building that is not generating any business is nowhere near as valuable. So from a risk management position, I personally would always prefer a title deed for this reason alone. Another difference is control. If you own the title deed, it is your investment, it is your asset, and you can use it however you see fit. This is not the case with a fractional ownership model where you are a minority shareholder. You do not have a controlling interest in the voting rights. Now, this means that you have no say over how your investment is actually run or managed day to day. This can be particularly troublesome when the time comes to actually exit the investment. Up to now, this is all sort of stacking up in favor of the title deed ownership model. However, because title deed ownership gives you greater security, the yields on offer may be a little bit lower. So in order to attract investors into a fractional ownership model, fractional ownership models tend to offer higher or more interesting financial cases from a yield perspective, offering you the potential for higher returns, which some investors will value over security. So to summarize, a title deed offers you greater protection, more control over your investment, whereas a fractional ownership model has greater downside risk, but it may have the possibility for higher returns if you find the right one. It is precisely for this reason that my team and I, when we build our exclusive investment options, we prefer building around a title deed model. Why? Because we are financial planners, wealth managers at our core, and we prefer building cases on a solid foundation. But there are some investors, some clients that prefer going into a fractional model based on the investment cases that are available. So we tend to offer a mix. Okay, so if you've taken anything away from what I've said up to this point, I'd really like it to be the following. So whilst we can hope for the best, we should always plan for the worst. That means understanding your exposure. Understanding your exposure in the worst case scenario. I would urge you to remember that this is at least a 5-year investment journey in order to get through to citizenship. That's a long time. So make sure you understand all of the potential scenarios that could arise. So some useful questions that you could ask before moving ahead with any investment are, what is my exit strategy? Is it a buyback or is it a long-term buy and hold that I want to keep in my portfolio? If there is one, how enforceable is the buyback? Is there a contract that I can read? How easily can I get? What are the protections that the buyback offers? Is it something that I understand? Is it something I feel comfortable with? Do I believe that the developer is going to be around? Next, how valuable is my asset without the buyback? Let's assume that the buyback isn't actually enforceable. What would that look like? Would I be able to get my money back out of the asset if the buyback weren't in place? How solvent is the developer? Now, this speaks to the various types of risk that we mentioned a few slides ago. It's a very important question. Who am I actually doing business with? What safeguards are in place to protect my investment? Is my Golden Visa agent performing any due diligence? Are they personally invested themselves? Would they actually put their own money where their mouth is into the investments they're presenting to me? And finally, how much can I trust my agent to act in my interest? What is their track record? What is their exposure if things go wrong? Now, one area that I believe sets my team apart from the rest of the market is the level to which We are invested in the future of the property developers we use. We build our partnerships in a vested interest model, and we stake a lot of our brand capital on the development partners that we use. So we have an awful lot of skin in the game as well. Okay, so now we know what to look for in an investment. We've got the theory covered. So let's turn to some practicalities by looking at some concrete investment cases. We're going to look at 3 today. A couple might be familiar from previous sessions. There'll be one new one. Oh, that says Palacio Dorsal. That shouldn't say Palacio Dorsal. That should say the Pelican Hotel. Please excuse me for that. The 3 that we're going to look at are the Royal Óbidos, which is the highest yield opportunity in the marketplace. We're going to look at the 1-bedroom apartments. Today, they offer a 35%, which is a whopping €175,000 gross rental yield. Net of withholding tax, that's €131,250. It offers you a full title deed. Next, we'll look at an option at the 400,000 minimum level, which is a hotel called the Pelican Hotel, not Palacio Dorsal, but it offers high yield and a title deed. When I say high yield, I mean 24 to 31% gross upfront yield for a 6-year period and a full title deed. And thirdly, we'll look at an option that offers a full title deed at the 280,000 minimum entry point, which gives you 2 studio apartments on the same title deed. And now that's a hotel called the Yellow Tulip. So getting started with the highest yielding investment, this is the Royal Óbidos Spa and Golf Resort, pays a whopping 35% gross upfront rental yield. As I mentioned, comes with some very attractive conditions. This is actually my personal favorite. It's where I would put my money if it were me looking at the Golden Visa, simply because from a risk management standpoint and from a yield perspective, it is standout the best in the market. Who is this for, though? Perhaps you don't feel the same as I do. This is for the investor that's looking for the best available investment. Budget can be a little bit higher than other investors because it's a little bit more expensive than the other options available, but the investor is very generously compensated for the extra outlay. It's also a 5-star spa and golf hotel, which is particularly nice to have whenever the time comes to actually spend some time there. In terms of location, it's very attractive, just outside the historic town of Óbidos. It's a 45 to 50-minute drive north of Lisbon. It's nestled in between a couple of other 5-star resorts in the area and is just a few short minutes away from the renowned Óbidos Lagoon and the very famous surfing hotspot of Nazaré. Now, in terms of the 1-bedroom apartments that we're talking about, these were actually built in 2021. So the hotel is now fully completed. It's operational. It's rated 8.7 out of 10 on booking.com. It has over 1,700 views as of the time of this webinar, April 2023. As these apartments are new build apartments, this qualifies for the Golden Visa at the €500,000 mark. However, my clients can invest in this property from as little as €369,000 plus taxes, and I'll explain how in just a second. With this property, as I mentioned, you're investing in a full title deed, your own apartment, not fractional shares in a building or business. This means that you have far greater control over your investment in the future and don't have to deal with any other shareholders. It also protects you if anything happens to the hotel operator, as you would still own a very attractive piece of real estate that could easily be resold at any point in the future. 1-bedroom apartments here, the vast majority have a stunning panoramic sea view as well, and are finished in keeping with a 5-star luxury hotel. The golf course surrounding the complex is a PGA standard golf course that's been designed by the late, great Severiano Ballesteros. It's renowned across Europe. It's a fantastic place to have around if you're a golfer. And just to make it even sweeter, the owner can stay in their unit for free for up to 6 weeks per year. That is well above what is usually available to a private Golden Visa investor. It's a really beautiful development, honestly. So I do wish I could walk you through the place instead of just showing you photos and giving you some information, but there you go. The financials, just to give you a little bit more information there, yes, it's more expensive than the 280,000 minimum amount, but the rate of return that my clients get is quite simply huge. 7% gross rental yield on this property per year, paid up front for a 5-year period before you even complete the purchase. So what does that even mean? It means that you are paid a net of withholding tax €131,250. If you add that, the fact that that's paid to you up front, you add that to the remainder of your capital, so $368,750 plus the property taxes are all that is required to purchase the property. And then after 5 years, the developer will buy you back for the original price of 500,000 euros. So 368,750 in, 500,000 out once you have your passports. Now, assuming that you take the buyback, which is entirely up to you, and you have 4 years to decide if you'd like to enforce the buyback or not. Otherwise you may be able to, you may elect to simply retain the unit, hold it and keep it as a part of your portfolio and rent it back to the hotel operator. In which case we would enter into a 50-50 profit sharing model with the hotel operator, and that can be extremely viable as well, as this is a very, very profitable development. This is the most profitable Golden Visa investment case that is available anywhere in Portugal right now, full stop. So if you want to get passports, make a healthy profit at the same time, this is the project that I would personally recommend that you look at, as long as you have the required level of capital here. The Royal Óbidos is also very well managed from a risk point of view. Why? Because the buildings are 100% finished, as we've mentioned, so no construction risk. All cash flows, except the buyback, of course, are paid to you up front. And you do have the peace of mind of the full title deed. So this really is outstanding as a Golden Visa offer. Showing you a couple of properties now. Now these are real photos. These are not mock-ups. These are not renders. If you're interested, I could send through walkthrough videos. Just let me know via email and check out the booking.com page as well. The next one I'm going to talk to you about is the Pelican Hotel. Now, this is a very, very interesting hotel that qualifies at the 400,000 level. The gross rental yield actually depends on the type of unit that you go for. You might get 24% if you go for the 2-bedroom unit, or 31% if you go for the 1-bedroom unit. Where is it situated? It's in Alvor, which is nestled in between Lagos and Portimao in the Algarve. Very, very popular sun and beach destination, which is why there are so many hotels in this area. It's 1.5 kilometers away from the beach, so it's walkable if you like a bit of a walk, and it's 2 kilometers away from 3 of Portugal's renowned golf courses. Just a 10-minute walk and you find yourself in the middle of Alvor's historic centre, and it's also 10 kilometers away from the Portimao Algarve Grand Prix racing track if you're into your motorsports. Okay, key facts about the Pelican. What are we talking about here? As I mentioned, this qualifies at the 400,000 euro level. 1-bedrooms are available for that 400,000 euro price point. 2-bedrooms are available at the 450,000 euro price point. And we do have one penthouse remaining, which is a 2-bedroom penthouse, which is 75 square meters of interior space and a whopping 150 square meters of outside roof terrace space, which is frankly phenomenal. And it's available for 460,000 euros. It's an outstanding unit. All of these units offer a full title deed, so again, some peace of mind there. The hotel is rated 8.3 out of 10 on booking.com, and it has all of the amenities that you would expect of a 4-star hotel in a popular area. Okay, I mentioned the yield would vary between 24% and 31%. 24% is the yield that's available on that penthouse unit. Why? Simply because it is a very attractive unit at that price point. So the penthouse, the developer believes that a higher yield is not necessarily needed here in order to attract a high level of interest in the units, and that's proven to be the case with the other penthouses. But the yield range here for the other units actually varies between 27 and 31%. If you go for the 1-bedroom units at 400,000, then the return is 31% gross, which is phenomenal for the 400,000 entry point. Now, the 2-bedrooms do yield a little bit less at the 27%, but it still makes a very compelling investment case when compared to the rest of the market. In both cases, the yield is paid to you up front before the property is purchased, and as with the Royal Óbidos, this can be used to reduce the amount of capital that's required to actually purchase the unit. So we're talking at around the 310,000 level for the 1-bedroom unit, or we're talking maybe 330,000, 340,000 for a 2-bedroom unit, depending on the case. Now, the buyback is actually exactly the same as with the Royal Obidos. It's actually with the same developer, so you have the first 4 years to decide if you would like to enforce the buyback or not. It's at 100% of the purchase price, and this actually happens after 6 years, because this is a 6-year rental period as opposed to the 5-year rental period as was the case with the Royal Obidos. A little bit less free stay that you've got with the Pelican Hotel, so 4 weeks instead of 6, but 4 weeks is still well above the market standard, and it gives you more than enough time to qualify for residency. To spend at least 1 week per year and qualify for the legal residency as required under the Golden Visa. So why would you go for this particular unit over the Royal Obidos? The yield is lower, you get lower levels of free stay. Well, the key reason is budget. If your budget doesn't stretch to Royal Obidos, then and you want to invest in something a little bit lower, then this is a very, very attractive option. Just to show you some visuals now. So again, these are real photos. So this is drone footage. The Pelican, what it looks like from the outside, what it looks like from the inside. So this is a typical 1-bedroom unit here. All units have their own balcony. This is a pool-facing unit. As you can see, impeccable state of the gardens. And that's the Pelican. Now moving on to the final one today, which is the Yellow Tulip Apartment Hotel. This is actually with the same developer yet again. So I'm showing three properties here from our preferred development partner. Again, we're looking at a full title deed. We're looking at the same mechanisms for a buyback, but this time we're looking at the 280,000 euro category. Okay, who is this one for? Now, if you're looking for the comfort and peace of mind of a full title deed, but you're trying to keep to a strict minimum purchase budget, then this would probably be the one for you. It means that you would need to tie up less capital than the Obidos, although this does mean a lower yield. As regards the location, it's actually next door to the Pelican Hotel. So I'm not going to repeat myself by going through this slide again, but it's right next door to it. And these are the key facts. So another completed building. So again, no construction risk, but it is a refurbishment project which is required in order to qualify at the 280,000 euro minimum. Again, you're buying a full title deed, but this time to 2 studio apartments of 25 square meters each. The hotel is a 4-star resort in the Algarve. It's rated 6.8 out of 10 on booking.com, but the reason that this is lower than the other 2 developments that we've seen is mostly due to the need for renovation in the building, but this is being done as part of the process and is of course included in the purchase price. You can stay in this particular property for free for up to 2 weeks per year. However, while we're looking at this particular point, I would point out that if you are looking for a strict purchase minimum and you want to invest something that's near to the 280,000 level, going back to the Pelican and the 1-beds, investing just a little bit more, the capital requirement is around 310,000 euros to get a unit that will eventually be bought back from you at 400,000 euros. So if you can stretch a little bit more, then the effective yield on the Pelican is far higher than what you can get here, because we are not talking about a gross upfront yield here. What we're talking about is a net yield of around 22,000 euros, which is used to cover taxes and fees. So that's an equivalent 10% yield overall, rather than the 27 to 31% yield that we were talking about with the Pelican for a marginally higher outlay. So I would tend to encourage you to look at the Pelican if you can stretch that extra couple of 10,000 euros. However, this is still a very, very interesting case. Why? Because it is a full title deed at the minimum entry point for the Portuguese Golden Visa. I mentioned that the buyback is exactly the same mechanism as it is with the Pelican and the Obidos. What is that mechanism? It is optional. It is at your discretion, not the developer's discretion. It is your decision whether you'd like to keep the investment or not after you've got your passport. If you decide to retain the investment after the initial rental period, which for this particular property is 5 years, if you decide to keep this beyond year 6 and beyond, you would enter into a 50-50 profit sharing agreement with the hotel operator and hold it as an income generator inside your portfolio. It's entirely up to you, or of course you can enforce the buyback. Now, again, completed development as with the other 2, so no construction risk. This is 2 studio apartments at an outstanding price, and what we're actually talking about here is the lowest downside risk of any golden visa investment on the market today. Why? Because the price point is at the entry level minimum, and we're talking about a completed building that holds fantastic intrinsic value. Okay, a couple of photos now just to show you what we're talking about with this particular development. So this is a slightly different vibe. This is more of a family hotel, all-inclusive resort, as you can see here. And those are the main investments that I would encourage you to look at. Now, before we start talking about next steps, it's very, very important for me to point out, I mentioned this in last week's webinar, that the law is changing, and very soon the Golden Visa program will close to new investors. What does that mean? It means that there is a very, very high demand of people rushing to get onto the scheme before it closes, and developers are not announcing any further projects because the scheme is ending. So we've got low supply, high demand. Now, the prices are the prices, they're not going up, yields are not going down, the conditions are the conditions. What that means is we are going to run out of availability before the changes to the law actually take effect. So it's really important that if this is for you and you want to get started, you put the wheels in motion right now, because not only are we contending with a deadline from the government, which is likely to be the end of June, but we internally will work into the end of May to get your golden visa applied for, submitted, and achieve your ARI number, which is what's required before the law actually changes. But we've got an even bigger problem than that, which is that there is huge demand for the remaining units, and once they are gone, they are gone. So if you've seen something that you like, I encourage you strongly, reach out to me. We'll set up a call as soon as possible. I'll get you a quotation, and then we'll talk about potentially moving forward if it's what you'd like to do. And that brings us on here to next steps. So the next steps, reach out to me. I will have a personal call with you. We'll drill into what is the best investment for your individual circumstances and objectives. I will give you a detailed line-by-line quotation that breaks down everything you need to know about the costs for the process. Once we've agreed the quotation, I'll need copies of passports for all applicants and proof of address. We'll then sign our Holborn client agreements, reserve the unit via reservation form. That is, of course, a requirement. And then we would need to send a property deposit to the developer to reserve that unit. Once the unit's reserved, my team will get to work setting up bank accounts, getting your tax identification numbers, and then we'll sign the necessary paperwork. So the reservation contract with the property developer, so we can get your yield. We'll move to property deeds, put property in your name, and then we'll get your golden visa application pack completed, submitted to CEF, the immigration authorities here in Portugal, for pre-approval. And that is it. So I hope that was helpful. I hope that shed a little bit of light on how to choose the right golden visa investment for you. There is still time to get onto the scheme, although that time is running out quite quickly. So as I mentioned, the first step is to get in touch. If any of this has resonated with you and you'd like to get moving on a golden visa before the scheme goes away for good, feel free to drop me a message at jonathan.ralph@holbornassets.com. I don't bite. I like to think I'm quite friendly. So I'll be delighted to help you in any way that I can. Right, I'm going to leave my contact information up on the screen here. I think this is a little bit of a smaller session than usual, so I don't anticipate us having too many questions, but let's open them up. Q&A box is there if you need to jump in. Okay, one question here from Anonymous. Anonymous is usually in my sessions, which is great. So welcome back. What are the legal fees in addition to the €5,300 golden visa fee? Okay, the €5,300 fee, now that is the fee payable to the Portuguese government when you actually receive your golden visa residence permit. Now that is about 12 months after we begin the process, roughly. It depends on the on CEF and their processing times. Now, that is a fee that's payable to the government. The legal fees that you can expect to pay will depend entirely on the complexity of your application, nationality that you've got, and also the number of applicants coming with you. How many people are joining, how many people are involved on that application. The higher the number of family members, the higher the legal fees, because the higher the level of work that the lawyer needs to put in. Now, our legal fees are some of the most competitive in the market, and I will break this down for you in the quotation so you have full visibility on what to expect. So I hope that that helps with that. I hate not giving a firm answer, but the question of legal fees is simply, it depends. Oh, and that's actually the only question that we've had today, which is which is quite strange. A quiet session. But fantastic. I can leave this there in that case. If you missed anything, not to worry. The recording will be sent out to you in a few days as soon as it's ready. We'll be uploading this to YouTube as per standard practice, as we usually do. And yes, like I say, if you'd like to discuss your own situation, reach out to me there. We'll set up a call whenever suits you. You've got my telephone number on the screen there. If you'd like to send me a WhatsApp instead of an email, more than happy to answer your queries there. So yes, I hope that was helpful. Thank you for joining me today. As always, a pleasure to have you along for these sessions. I really enjoy giving them. So thank you for your attention and sticking around to the end. Have a wonderful day, and I will see you in another session soon. Take care, everyone. Goodbye.